Yes, on the broader level, Indian economy has witnessed an unprecedented slowdown. The GDP growth for FY20 has been cut to 6% from earlier expectations of 7%. But I would like to focus on what would bring the growth back as we go ahead. Some of the short-term cyclical tailwinds which will come from the rate cuts. Reserve Bank of India has cut interest rates by 135 basis points. Transmission of these rates has been slower, with new loans only happening at 30 to 40 basis points lower. We see in the second half the transmission should pick up. We also think RBI can cut interest rates by another 25 basis points before it pauses to assess inflation data. Second one being monsoon. In India, monsoon is a key driver of rural sentiments, and this year with monsoons being good, we expect rural sentiments to drive consumption. Lastly, it's the government spending, which had been sluggish in run-up to the elections. Now, the government spending has picked up. For the quarter July to September, it's up 29%, and for the first half, it's up 14%. One of the key focus areas of the government's reform agenda has been to formalize more and more part of the economy, and most reforms have been directed towards it. Considering that the large part of the Indian economy is informal, these reforms have come with some short-term pain. Key one being GST, which is expected to add 1% to the GDP over long run, but has caused massive disruptions to the unorganized sector in the meanwhile. Similar thing can be said about experiment of demonetization. Other one being the new bankruptcy code, which has led to accelerated bad loan recognition, and the new real estate regulator has slowed down things in that sector as well. On the other hand, the transition to the digital payments has been faster. Within 4 years of government-backed digital payment platform being launched for transfer of money using mobiles, the transactions on those platforms have crossed total of credit card and debit card transactions. The initiative of providing social benefits into the bank accounts of individuals directly by linking their bank account with a biometric-backed ID and mobile phones has helped provide social subsidies directly into the bank accounts, helping government save around $7 billion annually in leakage. They have also had some successes on the Make in India side, with mobile phone manufacturing now picking up in India. We are most excited about one of the most unloved sectors in India, real estate. We like residential and commercial real estate space. Residential real estate sector has seen few big structural changes going for it. Government, in order to formalize the sector, has established for the first time a sector regulator. And one of the key target of the demonetization was the real estate sector due to its high proportion of cash dealings. This has paved way for consolidation in the sector. There are few cyclical factors also going for it. The oversupply has started to correct. The affordability has also improved because price stagnation and interest rates coming down. On the commercial real estate sector side, we have seen good absorption of office space in India on back of multinationals opening their offshore centers in India. As a result, the vacancy rates are down from 20% to 12%. And with the fall in interest rates and the REIT market opening up in India, the asset owners have a good opportunity to unlock value there. We also like broadly the financial space. We continue to like the undervalued private banks and selective government banks. These banks have near best-in-class liabilities and retail franchise. They have been undervalued due to historical large exposures to corporate loans which have turned bad. These banks are well poised to capitalize on the increasing consumer credit demand and developing digital payments ecosystem.